Noor Sweid, thank you for coming to the Forbes 3050 Summit.
Thank you for inviting me.
You are a venture capitalist who said on stage today that a quarter of your portfolio, which is mostly seed and Series A, is EBITDA positive. And that stat made your fellow panelists kind of do a double take, like I watched her head. How did you do that? And do you happen to know the metrics in terms of how many other firms in the venture community can boast the same statistic?
I don't know, but I think that no one else can boast the same statistic. So no one's really shared theirs, but I think that what we're doing is pretty amazing. I won't take credit for it. It's the founders. So we invest across the Middle East and Africa in Series A. The lack of capital in the venture ecosystem historically has meant that founders are just more capital efficient to start with. And to quantify that for you, last year, our entire ecosystem had $2.6 billion of venture funding. All of MENA, all deals, all year. The year before was record at $3 billion. But that's the size of our ecosystem. So as a result, when founders start companies and they think about how do I build this, their first port of call is not just to raise tens of millions of dollars, because that doesn't really exist. And even if they do raise that, they're not going to burn through it so quickly because they don't know if they can raise it again. So part of it is just the adversity advantage that founders have when they are in such an ecosystem. Another part of it is we are a B2B investor mainly. So the business models we back are more capital efficient and can scale more quickly with less money, which means, again, you can work to break even. But, the founders that do come in not at break even, not at profitability, we work with very, very closely to make sure that they are streamlined, they are quick to scale, and that they scale with very strong unit economics.
Is there a common theme in what you're doing with those companies that are not cash flow positive? What's the business development that you're working on with them to get there?
Well, I think it's, high level growth, so triple-digit growth on its top line, but also margin expansion on a very much bottom line, not just gross profits, but net profits, EBITDA. Those things matter. So we never had the grow at any cost mindset. For us, it's always been great high-level growth, but also make money on a gross level and sometimes on a net level. So it's not the ethos of the firm, it's more the ethos of the ecosystem. And we just happen to be investing in this ecosystem.
Just happen to be investing in the ecosystem. But you also told me that you look for innovative tech solutions. So you have a lens that is strategic, it sounds like.
We are very strategic and we are thematic. So as a former operator, so I've grown, scaled, IPO'd one company, sold another to a private equity firm. So we can look under the hood and understand operations very well. And I think that's important for an investor to know how to do that. And then you couple that with a strategic lens and a macro lens and the part of the world we're sitting in as an emerging market, a very high growth market. And the question that we end up always asking is, what are the cutting edge technologies available in the world that can be applied here that solve problems for hundreds of millions of people? And this part of the world, the Middle East and Africa, 1.9 billion people, half under the age of 30, 85% digital penetration, but you don't have, for example, financial infrastructure. So in 2018, we were 85% unbanked or underbanked. So you could easily build fintechs and not encounter incumbents. And that enabled the fintech companies to grow. So we've invested in what just became the first fintech unicorn in the region. We did their Series A 4 years ago, and their EBITDA is in the tens and tens of millions of dollars. 4-year-old company, but scaled well. And then you take a look at healthcare, and same problem. You have 1 doctor per 1,000 people. Europe has 4.5 doctors per 1,000 people, as does the US. The real honest truth is we'll never have enough doctors. So the question is, how do you use health tech to overcome that gap? And now that health tech exists in that way, you can do that. And again, no incumbents, no legacy infrastructure. So you get to a point where these companies scale very quickly and sometimes profitably. Today, we're looking at the same questions. Which industry 5 years from now is massively different to 5 years ago? Where can you use technology to affect hundreds of millions of lives? That becomes your TAM. And for us, the answers are supply chain tech. So we think that, in this part of the world, we import most things. So if you're going to start manufacturing, and if you're going to start thinking about supply chains, what are the best technologies in the world for that? And can you implement them here where, again, there are no incumbents? And the other area that we really like and where we're investing is agri-tech. So if you think about food security in this part of the world, we still import about 80 or 90% of our food. So if you want to think about how do you grow food? How do you feed your people? 5 years from now, things like vertical farming will be ubiquitous, whereas 5 years ago they were proof of concept. So how do you enable those technologies to scale in these markets? So when you think about the lack of incumbents and legacy enabling new companies using that technology to enter markets, solve real problems for hundreds of millions of people, and then scale, that's what we get behind.
That's a lot of opportunity. And do you think the global investment community has woken up to that opportunity?
Goodness, I hope not. Because if they have, then you'll have this massive influx of capital. You'll have valuation inflation. Whereas right now, because of the lack of capital, we're able to invest at multiples that make a lot of sense. If everyone just suddenly wakes up and comes in here, then the valuations go up, the multiples stop making sense, and our investors stop making as much on their returns as they do. I mean, as it stands now, our Fund 1, which is a 2018 vintage, sits at a 0.8 DPI, which puts it in the top decile performance in the world for that vintage. We've had a few exits, but none of our winners. But we had a few exits in 2021. But the ability to come in at regional multiples and then help a lot of these companies scale globally. So we have about a dozen companies that have more revenues in the US than the region. So once they do that, then these companies can demand international multiples. And that multiple arbitrage is hugely beneficial to us and our investors. It stops existing if everybody just finds out about the region.
So we should stop this interview now. It would be in your financial interest if we did that. I was going to ask because you said on stage that the entrepreneurs in this region are more capital efficient and have always had to be more capital efficient. Can you explain what that means?
So the lack of capital or the small size of our ecosystem means that there's a lack of capital for founders, and specifically strategic network capital. And so as a result, when founders raise $1 million, they will spend that in a very particular way where they can do so much more with it than the same founder building the same product somewhere else. So a lot of times when international investors come and do our follow-ons, they're properly surprised at how much has been built with so little funding. They've always been more capital efficient because of the lack of capital in this region.
And we say in the States that women and people of color are usually more capital efficient founders than their white male counterparts because they are relatively underfunded by comparison.
Same principle applies here.
Same principle applies here. What's the opportunity then for you or for global investors when we look at capital efficiency?
So I think there's a lot to learn from the founders in the region. I think especially as interest rates started to rise globally, the founders here kind of shrugged their shoulders and said, yeah, this has been our life forever. So we never had 0% interest rates. So I think that the adversity advantage that they've built over time is something international founders can learn from. I think investors have started to look more globally. We have seen a huge influx of investors into the region over the last 2 years compared to 5 years ago. So for us as a firm, half our capital comes from the US and Europe. And it's people that understand this is a growth market, they want to participate and they want to invest. So I think there's a huge opportunity here right now as this market grows very quickly.
So when we talk about the economic situation globally, obviously it's different region to region. And in the United States, we've been talking a lot about the flood of capital that we saw in about 2021 during the pandemic. And then there was the pullback. And 2023 didn't feel so good to a lot of VCs and entrepreneurs. I've heard some sources say that 2024 will feel better. What's your take on the state of the market right now?
I think it does feel better than 2023. The region lags in its economic cycles about 9 to 12 months behind the US. So whereas the US and the other markets struggled in 2022, that was our record year of funding at $3 billion. Compare that with when I started the firm 6 years ago, the ecosystem was $400 million. So it's grown about 8 times. Last year was $2.6 billion. So we lagged on the down and we lagged on the up cycle. So I reckon that this year might be a great year for us, but it means that definitely next year is going to be fantastic.
Well, that's a good hopeful note to end on. Any other predictions or advice for the VCs and founders watching this video?
I think build companies that tackle problems in a different way. Like, don't try to think outside the box. Maybe imagine there is no box and think, here's a massive problem and what are the best technologies that exist in the world today and how can I apply those to solve these massive problems?
Noor, thank you so much for sitting down with Forbes.
Thank you for having me.